Sriram from the Commodity Research Desk at Reliance Securities. This is the weekly commodity market updates. So beginning with the bullion side of things, last week gold and silver prices gained, supported by safe haven demand for both the metals amid escalating tensions in the Middle East. The price of gold and silver both moved higher despite stock markets holding on to gains and ongoing uncertainty as to when the US will cut rates going forward this year. The bullish sentiment was also underpinned by technical buying in both gold and silver markets. However, looking ahead, the gold and silver prices have corrected from their recent highs as fears of a wider Middle East conflict subsided after both Iran and Israel said that they were not interested in escalating things between them. Some technical correction was also expected from both bullion in gold and silver because both on the charts appeared extremely overbought, and that did in fact come this week, in the beginning of this week. So the short-term trend still bullion will depend on the data, and of course traders will remain cautious surrounding the geopolitical concerns in the Middle East. The US Treasury yields remained elevated over the last few sessions ahead of key data this week. We have the US GDP numbers along with the PCE price index, which is the Fed favored inflation gauge. So both of them will be a key trigger for the markets, and both of them will give or will provide cues of when the Fed will start cutting rates this year. The odds of July Fed rates is around 41% as of today. A week back it was around 36 to 35%. So the odds for July rate cut have risen slightly. If the data remains favorable for a rate cut, then we can see that gold and silver prices can bounce back from current lows and move back higher. Internationally, we can again see 2400 revisiting for the gold side of things, and silver again we can see $29 going forward in the 1 week or so. But if the data remain unfavorable, if the GDP numbers remain slightly unfavorable, again on the inflation side, if the inflation remains sticky, we feel that the July rate cuts will be off the table from the Fed. So I think that can keep this pressure on the gold and silver prices intact for the next 1 week or so if the data remains unfavorable. So we see market remaining volatile ahead of the key data points over the next couple of sessions. On the charts, we feel gold will find support around 2275 levels on the international side, and the key resistance now will be 2375. On the domestic side of things, we see 69,600 key support, and on the upside we feel 71,500, 72,000 remain a key hurdle for the markets this week. Moving on to crude oil price, international and domestic crude oil prices tumbled last week after Middle East tensions eased. Prices have started on a slightly prices did start on a positive note last week, Brent testing the $90 mark after data showed signs of strength in the US economy, which supports the energy demand going forward. Prices also remained elevated in the early part of the week after the Israel and Iran tensions escalated. However, towards the end of the week, as I mentioned earlier, Iran and Israel both de-escalated things and prices tumbled after that. Prices also eased after news reports suggested that the de-escalation or the escalation of tensions may not happen anytime soon between the two nations, and that brought the prices significantly lower over the latter part of the week. Looking ahead in the coming week or so, we see markets can remain under pressure if the de-escalation in the Middle East continues. Additionally, the prospect of steady US rates worsening global economic conditions could also weigh on the crude oil prices. The key trigger for oil will be the inventory data this week, and a build in inventories will definitely weigh on sentiments. On the charts, we feel NYMEX WTI June contract can remain within a broad trading band of $80 on the lower side to $85 on the upside of things. Domestically, the June contract, the May contract, could remain between 6,700 on the lower side to 7,100 on the upside of things in the coming week. Finally, on the copper side of things, copper and most base metals surged higher last week after the US and UK banned the LME and CME from accepting the Russian metals. The import of metals into the US were also banned. Russian metals were also banned, and this led to a fund buying in the market. Both copper and other base metals, especially nickel and aluminium, surged higher last week. Of course, data was mixed from China, but many people are, or many traders, I should say, are expecting some sort of a stimulus from that country, which could also support markets and also supported markets last week. But investors speculated that China, again, growth story remains sluggish going forward in the next few days, or I should say next few months. And if that sluggishness continues and is reflected in the data points over the next coming few weeks, we see slight correction for the base metals. For this coming week or so, we can see markets remaining range bound. Supply worries for copper and talks of Chinese government buying and providing more stimulus can lend some support. Data from copper smelters in China also reflected lower production. Possibly the output fall could be somewhere in the range of 10 to 12% from the Chinese smelters, and that could possibly support the markets going forward. We see markets can remain range bound to slightly volatile. Some technical correction cannot be ruled out as markets are extremely overbought, and traders and investors will also remain cautious ahead of that key US GDP number and the inflation number this week. So prices could remain or could track the data points this week and the next few days, and markets can remain range bound. On the charts, we feel copper domestically can remain within 820 on the lower side to 850 on the upside of things. And on the international side, we see somewhere in the range of $4.3 or $4.4 on the lower side to $4.5 or $4.6 on the upside of things on the comic side of things for copper this week. So that's it from our side. Thank you very much for watching. Have a pleasant day and a week ahead. Thank you.